Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Thursday, November the 7th. Well, with the Tuesday election results pretty much sunk in, attention now shifts towards the U.S. Federal Reserve, where they are expected to cut interest rates 25 basis points at the conclusion of today's meeting. And of course, tomorrow's USDA reports. Right now, the Republicans have gained control of the Senate. There are still a few races up for grabs in the House. However, according to NBC News, there are still 19 races still too close to call. Republicans currently have 209 seats and will need 9 more to form a majority of the 19 seats that are up for grabs. The GOP leads the vote count in 11 of those. Agricultural prices, they've turned higher here across the board this morning, led by a surge in beans. We're backing down a little bit right now. We're still 10 to 12 better in the beans. Meal's $2 to $3 better. Oil is flipped. That's about 10 better. And we're higher in the feed grains, steady to 1 better in the corn, and steady to about 3 higher in the wheat. Speculative traders were buyers across the ag space yesterday, led by the corn market, where they did buy about 18,000 contracts. They also scooped up about 6,000 beans, a couple thousand meal, oil, and wheat. We've got the speculative traders now net long the corn market, only about 5,000 to 10,000 contracts, but that would be the first long position now in 15 months. Open interest was also higher across the board yesterday, suggesting fresh money coming in on the long side. I wouldn't be surprised if some of this buying was index fund related, as perhaps a hedge against the possibility of higher inflation due to the proposed tariffs and tax cuts here by the incoming Trump administration. We also get a updated U.S. drought monitor later this morning, which will likely show drought conditions starting to ease across the central Midwest after much rain here in the past week or so. Forecast suggests another dose of healthy precipitation today through the weekend across, starting in the southern plains and across into the Delta and southern Midwest. Export sales later today expected to remain seasonally strong. Census data from China overnight showed that they imported just over 8 million metric tons of soybeans in October. That's down 29% from September, but up significantly from the 5.2 million metric tons they imported in October of 23, and then the highest for the month in 4 years. So was this import surge a result of increased demand, or just trying to get ahead of the possibility of a Trump returning to the Oval Office with the increased tariffs, and which we now know is the outcome here? So we'll have to monitor that to see if we see this stronger demand resume. I look for higher corn production tomorrow, yet lower stocks on higher demand. Flip the script into beans, look for slightly lower production, but higher stocks due to lower demand there. No changes in the wheat. D's corn broke out a little bit here to the upside. I think we'll need to see USDA come in with stocks below 1.9 billion to get a close over that 434 level, which is the October high. Today is also day one of the Goldman roll. In beans, January, they did push above their 1018 high here from kind of late last month. We did pull back here a little bit. Next resistance is at the 50-day moving average at 1023 3/4. Inside day for D's oil. D's meal broke out a little bit to the upside, highest level in about a week. Not a whole lot of resistance here on the charts till we get to some moving average levels at about the 319 level. And wheat just continues to chop in a sideways trading pattern, limited to about 560 to 580 for both December, Chicago, and Kansas City, $6 to $6.20 for Minneapolis. Thank you for listening, everyone. I hope you have a great day.